on. We're going to give attendees just a moment and then we'll get started. If you've just jumped on, we're going to give attendees just another minute to finish logging in, and then we'll get started with our call today. I see that folks are still joining, and we don't want to stop. We don't want to start with important policy information until we give everybody a chance to jump on. So thank you for your patience. We will get started here shortly. Thank you for joining. Hello and welcome to the National Community Stabilization Trust's biweekly community impact briefing. We hope that despite what appears to be a new spike in COVID in various areas across the country, your families and teams remain healthy and your work is continuing. My name is Erin Persons, and today I'm joined by my colleagues at NCST to bring you an expanded policy update, along with time for you to share information about your communities that's critical to informing our work going forward. We hope that today will be an interactive discussion. Questions and feedback can be posted through the chat or Q&A, and we're happy to unmute your line so that you can provide feedback or ask questions directly if hands are raised. With that, I'm going to turn things over this morning to our DC policy team of Julia Gordon and Chris Siglin.
Good morning, everybody, or good afternoon, depending on where you are. We are so glad to see folks on the phone today. We know that August is a particularly busy time for vacations and the like. So we did not invite an external presenter today. We thought we would take this time to discuss policy issues in a little bit more depth than we usually do, and also to have an opportunity to hear from those of you out in the field as to how things are going, given the trajectory of, what should by now have been the end of the pandemic and getting back to normal, and instead we find ourselves really still quite mired in this situation. So what we're going to do is I'm going to talk a little bit. I'm going to turn it over to Chris Siglin, who's going to talk about some other policy issues. But we really do want to take your questions, hear your concerns, hear your feedback, because in some senses, we can help be your voice here in Washington, and we are trying to promote policies that we believe will be helpful to your work. But certainly to the extent they're not, we would want to hear about that. And if there are other things we should be doing, we definitely want to hear from that too. A number of the policy actions we've been involved with have been initiated by or have been spurred by conversations we've had with our buyers. And we're just always really grateful when people flag issues for us that we are not necessarily either as aware of or as aware of how much a priority that they are. So I am just going to start this morning by talking a little bit about where things stand in Congress right now with respect to a new, or fifth COVID-related relief bill. I'm sure you follow the news because nobody can help but follow the news these days. And you know that we are in a bit of a stalemate right now in Congress. The HEROES Act, which was passed by the House almost 2.5 months ago now, is a very expansive $3 trillion package that provides quite a bit of assistance for families and businesses dealing with the economic crisis. It really builds on the CARES Act, and it addresses a full range of issues, including quite a number of provisions related to housing, both home ownership and rental. What has happened in the Senate is the Senate has not yet taken up the HEROES Act. Instead, the Senate Republicans have countered with their own bill, the HEALS legislation, and that legislation really was very minimal, less than $1 trillion, and it does not have a housing title in it, or a housing or financial title in it to help with a number of the issues that those of us on this call are particularly concerned about. So what is happening right now is while leadership engages in a series of posturing, both with respect to each other and with respect to, the White House is also posturing and signaling and doing all the things that get done here inside the Beltway. Staff are continuing to work on trying to find ways to move forward with some of the most important provisions of the HEROES Act in something that can gain the support to pass Congress and be signed by the White House. So I want to talk a little bit about some of the provisions that here at NCST we've been most focused on. You've heard about many of these before, but I want to provide a little bit more detail and make sure that everybody has a common understanding of where things stand right now, particularly with respect to families who are homeowners and who are experiencing a hardship, due to everything happening at this time. So, but before I launch in, I just want to stop there to see if there are any questions at this time or anything to add. Okay, so going forward, I want to talk about a few provisions that we think are particularly important in housing, and I'm gonna have Chris cover some of the rental provisions in more detail. I'm going to focus on the home ownership and forbearance related provisions. Now, of course, NCST is also strongly supportive of Congress providing more funding for families to cover necessities through, additional stimulus payments, extended enhanced unemployment benefits, and other support for, basic services out there, whether it's utilities or broadband, food, energy, et cetera. we are extremely supportive. That's not where we've been providing our expertise. Really, we've worked very hard on two specific provisions. One is to create something called the Homeowner Assistance Fund. And this fund was inspired by the Hardest Hit Fund program that many of you may recall from the financial crisis that was provided with TARP money. And what the Homeowner Assistance Fund does is it would provide a total of $75 billion to all 50 states, along with territories and tribes, to address the ongoing needs of homeowners and renters struggling to afford their housing. This provision would run the $75 billion through state housing finance agencies, who would have a great deal of leeway in designing programs that are responsive to the needs in their state. The provision is very expansive in its allowed uses, including providing direct assistance on mortgage payments, property taxes, property insurance, utilities, which is a really big one and is sometimes the reason people lose their home, and it's got kind of a catch-all other housing related costs provision in there as well. So we imagine that this funding could be used in a variety of ways to keep people in their homes. Most notably, I think it could be used when people reach the end of a forbearance period and are trying to get back into paying their mortgage if they are reemployed, but they may need help with all the arrearages. While for federally backed loans, there are some fantastic options right now to help get families into that reperforming status after their forbearance. Those are not uniformly available to non-federally backed loans, bank portfolio loans or loans that were privately securitized. And sometimes those provisions might not be available if somebody has already gotten a particular solution, but then they find they can't afford it and need a second solution. So states could use these funds to help those homeowners get back into reperforming status by, say, paying back escrow shortages, paying off various types of arrearages, or doing other things necessary to get that person in a position to be able to continue to maintain their home ownership through an affordable monthly payment going forward. Like I said, the ability to help with utilities is also key for people who may have a mortgage forbearance and therefore don't have to worry about paying their mortgage, but who have lost all their income and may be losing unemployment insurance soon. It can help with all of those other things that have to continue to be paid even at a time when you may not have to pay your mortgage. So NCST worked a great deal on this provision and is very, very supportive of it. The other section of the HEROES Act that we've spent quite a bit of time on is a section that extends and expands eviction moratoria and the forbearances provided under the CARES Act. Specifically, we're trying to do the following things. One is to extend those CARES Act forbearance rights to all homeowners, not just those in federally backed mortgages. We are also trying to make sure that for anyone who has a forbearance, when that forbearance ends, they are able to transition into monthly payments that are affordable to them rather than being required to pay everything back in a lump sum. At this point, the federal regulators have provided a number of options for families, and this is really important for everybody here to know, because I know that you're in touch with people, who may be in the, who may be in a forbearance or needing a forbearance, considering one. And it's important to know that even though post-forbearance provisions were not included in legislation, that the regulators have provided for an excellent range of post-forbearance provisions that should give homeowners comfort in entering into a forbearance plan, even if they do stay in that forbearance for the up to 360 days permitted, where you will build up quite a bit of arrearage. Even FHA has come out with some new loan mod options that did not exist before, which is, something people have been pushing for a long time. We are hearing from some housing counselors and other folks that they continue to see borrowers who have federally backed mortgages avoiding going into forbearance because they are concerned about that lump sum repayment requirement on the other end. And I just want to make sure everybody on this call is aware that for folks with Fannie or Freddie mortgages or FHA, VA, or USDA mortgages, that really should not be a reason now not to get into forbearance, especially for those folks who are going delinquent otherwise. We estimate that somewhere between 500,000 and 1.5 million homeowners in America right now have gone delinquent on their mortgage post-COVID without getting into a forbearance. There is virtually no situation in which they are better off by not getting into a forbearance. And we hope that you all will join us in trying to, encourage people in your community, get the word out in your community that forbearance is a real option. It is not a trick or a trap. Again, less clear for those folks who have private mortgages. And there, I think it's very important for homeowners to get help from a housing counselor or another intermediary who can help them ensure they understand what their lender is offering to them or their servicer is offering to them. But for people in federally backed mortgages, these provisions are very helpful right now. It would be great for us to be able to get these post-forbearance options into the legislation that is pending. That would give everybody quite a bit of comfort. If we could extend it to the private market as well, that would make all this work so much easier, because servicers would not, get confused or have different kinds of options that they're trying to offer based on what channel you came in from. So that's something that's really important to us as well. We're also trying to get provisions that cover borrowers who may be in bankruptcy. At economic times like this, bankruptcy becomes, an option that more families have to look at. And that has historically been a complication when it comes to loss mitigation and loan modifications. And the provisions in the HEROES Act would help with that too. Some other important provisions in here that were not in the CARES Act. One is that for single family investors who receive a forbearance on their mortgage, they would then be prohibited from evicting their tenants. This is true on the multifamily side, but not on the single family side. additionally, there would be provisions, broader provisions in the HEROES Act outside of just the housing context that would halt negative credit reporting. While this is not a provision that NCST has been working on, and while there's definitely a robust conversation going on about how extensively Congress can interfere with the credit reporting system before lenders stop trusting it. It's noteworthy that, at least right now in the mortgage space, the way forbearances are being reported to credit reporting agencies should not be hurting their credit for the future. We hear that as another reason people aren't going into forbearance. I'm going to stop there on the housing provisions. I do want to mention just a couple of other things that might be of interest to you and your communities. One is the HEROES Act also protects student loan borrowers who were left out of the CARES Act, and making sure that they have access to something similar to a forbearance, as well as trying to protect stimulus payments and unemployment benefits, et cetera, from debt collectors, which also is important at this time. So I've just dumped a lot of information out there, and I really want to hear from you on how this relates to what you're seeing out there, what is happening with homeowners that are connected with your organization. What are you hearing amongst yourselves?
As a reminder, if you'd like to speak with our panelists directly, you can use the raise hand feature. Otherwise, the Q&A or the chat are also available. We're requesting feedback on what you're hearing from homeowners in your areas.
Does anybody know a homeowner who has not taken forbearance, but who is struggling financially? Okay, well, hearing no questions, I'm going to turn it over to Chris.
Wonderful.
Hello, I'm Chris Siglin, and I was going to walk through, there are analogous provisions in the HEROES Act for renters. And I think it's really helpful to think of these things as an integrated whole, because there's basically three important pillars to the protections for renters, who are disproportionately hit by job losses from COVID. Recent press reports estimate that 48% of the renters in Texas are going to have trouble paying 100% of their rent. So this is a serious issue. The HEROES Act expands the moratorium on evictions to make it more uniform, so people don't have to rely on the patchwork of state and local eviction moratoria. But coupled with that is a package of $100 billion in rental assistance money that would go out, unlike the homeownership assistance that Julia was describing that would go out through the states. This would go out through emergency shelter grant money. So that goes to local governments and nonprofits, and they'd be able to use it to pay back rent, pay back utilities, and so that renters, because without that rental assistance money, all an eviction moratorium does is delay the day of reckoning, and then some poor renter who couldn't pay 1 month's rent at some point in 6 months faces an arrearage of 6 months, which can look absolutely, insurmountable. So there's $100 million of rental assistance money, and there's been, there's debate within the field of different ways this could go out. It could be home funds, it could be Section 8, it could be but ESG is the vehicle chosen by the House of Representatives. And then there's an additional, really a particularly vulnerable group is homeless individuals who need to have a place to shelter in place to not spread the virus. And so there's an additional 11.5 billion in funding to help shelter providers house the homeless. And they've been doing creative, smart things. Like there's lots of states have hotels and motels that aren't being used, that localities have used some of the earlier tranches of this money to buy motels or rent motels so that homeless people have a place to go to ride out the pandemic. So all of those provisions are being negotiated right now, and the president has picked up just the eviction moratorium, and it has been saying that he could do this by executive order. But the position the Democrats are pushing back with of, no, we need this whole package and we need the rental assistance money. Because the other thing to think about is without the rental assistance money, not only would renters face these terrible, could be evicted for back rent, you'd also could have a wave of bankruptcies of small landlords, which again could lead to blight and vacancy and abandoned property, which is central to our mission to not allow that to happen. So any questions?
We did get some feedback from Linda Charles in Palm Beach County, and I'll go ahead, Linda, and if you'd like me to unmute your line, you can raise your hand again. I'm happy to do so. She's in, there we go. I'll go ahead and unmute her. She can provide her feedback directly. Linda, you should be unmuted at this point.
Hey, Linda Charles from Palm Beach County. I work for Community Partners of South Florida. So what we are seeing, less homeowners asking for forbearance because they're using the CARES Act for like $20 million for mortgage assistance relief, and they pay up to $10,000 or 4 months. So now we are one of the agency that's provided counseling. For the renters though, we are running into, we're also partnering with the county on that, but many of our residents, particularly in the Glades area, Western Palm Beach County, are undocumented and no access to the money. What have you seen other people do in other areas? And is there any, how can the money be used, or is there any other funds that can be used for things like that? Thank you.
That is, you've described one of the real sticking points in the negotiations. The House Democrats have been, because we're all in this together with the pandemic, and you don't want undocumented humans out on the street having no shelter when we're asking everyone to shelter in place, that the House has been pushing that the money can be used on undocumented in this next tranche of funding, but we don't know what the outcome of that will be in the negotiations.
Thank you.
I think I want to chime in and just, it's interesting to me that localities are using these funds to provide mortgage assistance. And the reason it seems noteworthy to me is the funds are all very finite. And I would say that by and large, renters who are under, and if there's an eviction prohibition, but renters are still not paying rent and they are accumulating rental arrearages, they are going to be in a very difficult position when eviction moratoria expire, whenever that is. They're going to have to pay back that rent. Since anyone with a federally backed mortgage really has very, very good options for stopping for putting that mortgage on pause and for having affordable ways to pay it back over time later. I would definitely be mindful of trying to take subsidy funding and put it toward the place where there is a less good alternative. So Just wanted to put that out there.
I mean, it's important to note that the details of the eviction moratorium are that landlords are forbidden from piling up additional fees. And there's, there are the more comprehensive eviction moratorium in the HEROES Act protects renters from falling off this cliff.
Julie and Chris, I'm not seeing additional feedback or questions in the Q&A, and we don't have any hands raised at this point. Additional comments from either of you before we move on to some additional questions? Great. With that, we're going to expand our call to ask some additional questions today to inform policy work going forward and just inform us about how things are going across the country. One of the first questions we'd like to ask of you today is about emergency relief funds and specifically for your organizations and how they have or have not been helpful in keeping your financial health manageable within your organizations. Again, chat, Q&A, or raised hands are helpful. Kevin Moody, I have unmuted your line. It looks like you are still muted on your side.
Okay, can you hear me now?
Yep, we can.
Okay, good afternoon. Yes, we applied and were approved for some of the PPP funds and the EIDL advanced in the beginning stages. So that helped us, in the beginning, but we have basically utilized all of those funds now. So we are maybe hopeful during this next round that maybe some of the people that were previously approved will be able to apply for additional funds. So it definitely helped us get through some of the initial rough times.
That's very helpful. Thank you for that. Any others have feedback on that specific question? Next question is really about COVID. As I've noticed, just looking at the news, as Julia said, it's hard to stay away from the news these days. Are folks experiencing a reversal in the phased openings in your state, and how is that maybe affecting your work? Are you having contractors that are no longer working again? How are those kinds of things going? And then Stacy, I do see your question. We'll get to that next. Thoughts from anybody on, oh, here we go. Stacy, I've gone ahead and unmuted your line.
Okay. I have 3 or 4 crews of folks that help me renovate houses, and they've been hit with COVID. I think we've had 3 or 4 teams go out at different times, most recently last week. So it is slowing the process down as far as getting properties done and ready. But our staff, I mean, I'm going to just knock on wood, we've been fine in that regard.
And Stacy, can you remind us which organization you're with and where you are in the country?
Oh, I'm sorry. I'm with From House to Home, and we're in Baltimore, Maryland.
Wonderful. Thank you so much.
Sure.
And Julia and Chris, there was a question from Stacy in the chat as well. Do you happen to have indication on when the federal government might be lifting the moratorium on foreclosures?
Sure. So as people probably know, the current moratorium, which is really right now a regulatory moratorium, extends through August 30th or 31st. How many days does August have? The end of August. I have to do that little poem in my mind.
30 days past September. Yep, I just did it in my head too.
Yeah. I am hearing from various sources that they are expecting that to be extended, but not by very long. And of course, you never know what's going to happen. I do expect that to the extent we get an additional piece of COVID relief legislation, that it will occur before August 31st. So I am assuming the regulators are waiting to see what other shoes drop in Congress before they make decisions from a regulatory point of view. On a number of provisions, what they do is they tiptoe right up to the line and then they extend it. That just happened with respect to the forbearance provisions in the federally regulated spaces where they were purchasing loans that had gone into forbearance after closing, but before, either before they were securitized or before the insurance was put on them. They did just extend that further. So they since these things are easy for them to do, they just wait until the last minute, which is not the best way to run a railroad, but it's how these things happen.
For sure. Brenda Dawson, I've seen your comment in the chat. It's to speak specifically to crews not having enough work to keep them employed. I'm only going to assume that, like many folks, inventory is affecting your organization. I can tell you that NCST has not begun to see an uptick in inventory. We don't expect to see an uptick in inventory quickly. We've also been talking to other providers that are seeing exactly the same thing, auction vendors, other servicers. So inventory just is slow across the board, and we certainly don't expect that to go back up until moratoriums have completed. Linda? Did you have
the question had been answered, the one that it's about the vendor and the slowness of construction, just because the vendors are either not available or everything, is really slowed down, at least for a couple of weeks for many of our projects.
Got it.
Okay.
It's helpful. Maybe to move on to another question. I know that as we started this crisis, many folks were having trouble with capital. Capital being inflexible and capital providers being very risk adverse. Wondering how that's moving in your communities now. If you've seen some relaxing of the requirements, are your capital providers starting to become more flexible? Anyone have feedback on that? Kevin, go ahead.
I don't want to see, can you hear me?
Yep, absolutely.
Okay, I don't want to seem like I'm hogging space, but we have not had any problems with financing. We work off of existing lines of credit for all of our properties, don't have any subsidies or grants. Our problem is just inventory of available properties.
Understood. And Brad Geisen, I see your comment that funding is back and strong. That's good to hear. Also in Florida, no problems with financing because of lines of credit. Eugenia Hamlet, I've unmuted your line.
Yes, yeah, pretty much. I just wanted to add, yes, financing, they're coming back. Even on a refi, we're having lenders coming back, sending us email that they're back in business. So yeah, I guess the only, like Kevin says, inventory is the only situation now.
Understood. And we'll continue to work to provide you updates on when we might see that inventory increase again. We've had many conversations with different folks across the industry. Next piece is really related to what's happening after rehab has been completed. So properties that are ready to go onto the market, a couple of questions there. The first one is related to buyers and any delays due to furloughs, loss of job, et cetera. How are your organizations being affected in that way? If at all. Thoughts from folks? Oh, we've got hands raised. Let's see. Stephanie, I've unmuted your line.
Thank you. This is Stephanie Quick with Renew Indianapolis. I guess most recently, we have not had an issue in regards to buyers and the buyers moving forward to the closing table. We've been really fortunate in that regard. We have seen that buyers are just a bit more, I guess the best word is picky in regards to selecting their home and negotiating the final deal. We did have some issues at the onset of the pandemic where just days before the closing, we did have lenders go back and underwrite the buyers again and re-verify employment and even re-verify past employment. So that did hold up some closings early on, but really nothing lately in regards to that.
That's helpful. Stephen Torcell, I've unmuted your line. Stephen, are you with us? We'll go ahead and move on. Brenda Dullison, I've unmuted your line as well.
Hi. Okay, so same situation with us. We had a client 1 week, was in closing, was ready to close in 1 week and was furloughed by Disney. The interesting thing is those are the people we're trying to reach out to, you know, in that moderate income price range, you know, like below $180,000, which is very, very difficult to come by here in Orlando. So we were excited to find a property and fix it up and put it on the market in that community, and someone in the community purchased the property, which we were excited about. The only problem is a week before closing, you know, working at Disney, she was furloughed and she was very excited about the property. So we held the property for her until she went back to work 2 weeks ago. And she closed and she's extremely happy. She would walk past the property a couple of times per week to make sure the property was still there. So other than that, we haven't had any problems. Our properties are selling 2 or 3 days on the market and they're gone. We just don't have the inventory right now.
Well, that certainly is good news. And just based on that story, I wanted to remind folks on the phone, please do continue to share your good stories with us. We have that available through our website. You can also contact your community development manager. We always like to be able to feature stories like that on our website and in our publications. So that's fantastic news. Thank you so much for the good work that you are doing. Stephen Torcell, were you able to get through on your line? Seems like we can't reach him. Brad Geisen, are you there? Brad, I've unmuted you. You'll need to unmute as well.
Hi.
Hi, Brad.
Hi, this is Brad Geisen with City Vision. Yeah, we're having the same issue. We have a number of properties where we have some buyers that were furloughed. We're doing the same thing. We're waiting. And on a few of them, when they got their jobs back, then the appraisals expired, their mortgage lock expired, right? So it's almost like starting over again, but we're doing what we can to work with them and get them in. We're in the same boat. Everything sells in 1 day. So we're, inventory is our issue now also. But all good. We're just working through it with the buyers. One thing we're running into, which is sort of a new nuance, and we're trying to figure out how to better do this. We've been getting a lot of contracts submitted, we accept them, and then there's an inspection period, and we find that the buyer had never actually looked at the property because of COVID.
Sure.
And made the offer online, right? So we've been doing a lot of work where we accept contracts, go through all the, all that contracting back and forth, and they go out and look at the home and they say no. So that's a question now that we ask, have you seen the home?
Right.
And so what we do is now we're doing what we have like a soft acceptance, saying, okay, we'll accept the price, but before we sign everything, we're going to give you 2 days or 5 days or whatever to go look at the home before we sit down and do all the paperwork.
Right. So just out of curiosity, because of some articles that I've been reading lately, I'm interested in the types of inspections that are being done by buyers. Are many of you using virtual inspections? Are you utilizing only in-person inspections? And how is that? So Brad, in terms of not inspecting the house, are only in-person offered, and that's where there are issues, or they're seeing the home online and then coming in and they find that it's different than they expected?
No, so we're, I think everybody out on the line is in the same boat, where we're not the typical home being sold, in the sense that nobody's living in these houses, right? So COVID is not really there's no social, there's social distancing. You go to the home, it's completely vacant. There's nobody else there but yourself and your inspector, right? So we really haven't seen any issues there. That hasn't been it, but there's been a lot of buyers that just submit offers online, because we've done a really good job with, videos and photos, and you can literally walk through the home, and, we use the Matterport photo where you can, basically do a virtual open house and walk through the home and see it. So that helps get the offer in, but we are learning it's still not like seeing it, right? And then they get there and there's something they don't know the neighborhood, or they don't, and then they want out. But we haven't had any issues with that, with COVID, as far as people not wanting to go there.
Interesting. It sounds like, just from the comments, I'm seeing that other people are experiencing the same. So seeing the homes in person, full inspections, COVID not being an issue there.
Yeah, I'll tell you one thing that we've done is we have a title division that handles all of our closings and coordinates them nationwide. We've had all of our paralegals in our title division get virtual notaries, which is kind of a new thing. And, it's about $150 a person to get signed up as a virtual notary. Mm-hmm. But we're able now to do our closings 100% virtual, which is something we haven't been able to do before, right? So I think that's a big step in that direction. We got the virtual open house, we got the remote closing with the mobile notary, or with the virtual notary. But no matter how you do it, real estate is still a, touch it and feel it kind of a thing. You need to go to it, you need to see it, you need to walk through it, because that's where you're going to live, right?
Absolutely.
So we're always going to have that issue. There's no way to completely virtualize this industry.
Sure. Well, that's helpful feedback. Thank you. The last question, and this is something that we've touched on several times in other calls, but I know this can be changing rapidly, and that's related to value in your areas. So as you're seeing appraisals, as you're seeing just values in your neighborhoods, are they starting to come back lower than expected due to this crisis? Have you actually seen values increase due to demand? Very interested in that in your communities. Go ahead, Brad.
Oh, am I on?
Okay.
You are. Yeah, so in our area, it's the craziest thing. I expected there to be, a decrease in values. I was a little concerned. We took out a number of properties that were extremely lean, and really, really working on make them go. Everything we've sold 20 to 30% above our expected price. And it's not that we put the properties on the market, but I'll give you an example. We had a house that we put on the market for we were estimating it to be $289, and we did a bunch of work on it. This is up in New York, and then I'm thinking New York too, with everything going on.
Right.
And we put it on the market at $319 because the city made us redo all the electric, and we did a bunch of stuff in the house. So we put it on $319. We thought, wow, it's going to be tough to get $319, and it's going to be a tough one now that we did all this extra work. House is on the market. One day we get an offer of $330, $340, $350, all cash.
Wow.
So that's how crazy this market is. I can't explain it.
Yeah, that's definitely helpful to understand, as I know that you work in several markets. It's good to hear that New York is
On fire.
doing well. From your perspective, definitely. Linda?
I don't know about the city.
Oh, sorry. Yeah, I agreed, but definitely I'm glad that folks are able to find places to live. Linda?
Yes, I think in Florida or in Palm Beach County, nothing has changed. The median sales price continue to be high and unaffordable to some of our clients, which is more at 80% and below. And as I don't know if many of you are from Florida, so you know that the SHIP funds or the housing trust funds have been vetoed. The governor did veto it, so they have not. SHIP is not available. So yeah, so we still see very high price. Yes.
That's great. Looks like, thank you, Tom, for that. Philly is a hot market as well, so that's great. Stephanie, quick.
Yes, just to follow up on one of the previous responses. So we too have been receiving offers and just a ton of showings on our properties here recently for these that we've listed. Again, buyers are being just a bit more picky. But what we have seen in the last 2 homes is that buyers are submitting offers for above list price, because once the offers start coming in, they start coming in hot and heavy. But what we've experienced is, and just wanted to bring this up so that in case others are experiencing it or maybe be cautious of this, when a buyer has their financing is through FHA, and if we've acquired our property through NCST within the last 6 months, the lender, and I'm not going to remember exactly what the term is, so maybe you can help me with that. But the lender is requiring a second appraisal because of I think the anti-flip law. So we've experienced that, and I'm at least twice now, and I'm concerned that it's going to happen again because of the offer that we received here recently that was quite a bit above list price. And that right there just goes to show just how just how much there is a need here for housing, for even affordable housing here in this area, that folks are now either they don't think that it's going to appraise the amount that they've offered, that they've asked for it, and they're thinking that we're going to have to back down to an appraised value, or on the anti-flip side of it, that's just something internally that we have to be sort of cognizant of in the event that we have to pay for that second appraisal, assuming that it appraises at list price the first time around.
So excellent point. This is something that has been near and dear to NCST's heart for at least the 12 years that I've worked for the organization. So that's definitely something that I've written down already, is this whole anti-flip piece. I appreciate the additional pieces in the chat. I know Kim Malinsky, you had a question. Are these cash and all cash and short on market sales for income qualified affordable homes or market rate? I'm not sure that I completely understand the question. Kim, are you in a position where you could raise your hand and we could have you ask that in person? Great. Kim, I've unmuted you. You might need to unmute yourself. We can't hear you yet. Don't have a mic. Okay, great. I apologize. Julia or Chris, do you maybe have some thoughts on that question?
I don't have any particular thoughts other than that we have gone to FHA about this multiple times. We have had FHFA go to FHA about it. They have been unmovable. We are this is something we continue to bring up with them when we meet with them. And, if if at such point as there are leadership changes, we will try each time. Folks may or may not know this, but the Senate just confirmed a new FHA commissioner, Dana Wade. So now that she's been confirmed, it's, you know, an excuse for us to go meet with her and present pretty much all the same things we present every time, but you never stop trying, right? So this has always been very high on NCST's list of things we're trying to change. You know, if there's a significant change in November, I would say by next January, we have a good chance.
Absolutely. So hold out hope and tell everyone to vote, I guess, is the answer there. Those are the questions that I have today. If there's something that we haven't asked or covered that you want to share related to what's happening in your market that you think would be helpful for our policy team or even our operations team, I would open up the call for that at this time. Thoughts from anyone? Julia, it looks like we may have asked all the right questions today. I'm going to turn it back to you to close us out.
Well, we really appreciate everybody weighing in, and particularly some of the stories. You know, it seems to me that one of the real merits of what you do is, you know, was embodied in hearing about how you've helped to accommodate people who have run into furlough situations. That, you know, that is something that takes a seller that cares about its buyers and that cares about its communities. And it's just not an everyday thing. And it speaks well of all the programs that you're running. And stories like that, I know that, you know, I always say this, but it can't be said enough. When I'm with policymakers, one or two stories like that can make the difference in getting something changed. They really provide a personal flavor that hits people sort of in the heart of you know, why they want to support this work. And so I just can't encourage you enough to share stories like that with us. And we actually may come back to some of you who spoke today to see if we can have permission to share that story more broadly. So thank you all for your input. And, you know, as it turns out, this pandemic thing is not a sprint, it's a marathon. So, you know, I'm wishing you all health and strength and continued ability to, you know, wait through the inventory shortage. And we are, you know, we're hopeful of better times soon.
Absolutely. And as we close out today, I would remind you that we'll be back together again on Wednesday, August 19th, where we'll be joined.
No,
we will not be back together on Wednesday, August 19th.
We should announce that.
My apologies. I misread an email. When will we be back together?
We will be back together on September 2nd.
Wonderful.
We will not be holding our call on August 19th for two reasons. One is everybody's going to be on vacation. And the second is that NeighborWorks America is having an event that day that we know a number of you will be joining. So our next call will be September 2nd, and we will look forward to seeing you then.
Wonderful. Thanks so much, everyone, and have a great rest of your week.